Good afternoon, my name's Craig Earlham, market analyst at ALPARI UK, and welcome to today's daily update on the markets. This afternoon we are seeing stocks trading higher. We've got the indices trading up at around 2%. We've also seen the euro and sterling against the dollar trading higher. The euro is currently trading at around 127. We've got cable trading at around 157. And the reason for this improved optimism in the markets is coming over from the US. A couple of weeks ago we did have Ben Bernanke say that the Federal Reserve were not planning on embarking on further quantitative easing, or QE3 as you might say, and he pointed the finger back towards the government saying it was fiscal policy that needs to be improved, not monetary policy. However, there's been strong rumours over the last couple of days that instead of embarking on QE3 we are actually going to see an extension of Operation Twist. Now Operation Twist is essentially where the Federal Reserve sells short-term bonds and use the funds from these short-term sales to fund purchases of 10 and 30-year bonds. Now the impact that this has on the markets is it does bring down the yields of these 10-year bonds, and with mortgage rates over in the US being linked to these 10-year bonds, 10-year treasuries, it means that mortgage rates become lower for the consumer, which means mortgage payments are lower, and aside from being beneficial, like I say, for the consumer, it also encourages people to take out mortgages and encourages lending in the US, which is essentially what it is we're looking for to get this economy going again. And that's something that's escaped that hasn't been achieved from quantitative easing recently, where we've seen quantitative easing pouring more liquidity into the banks. However, the banks have not wanted to lend, and therefore the operations haven't worked, which is why the Fed have been so against QE up until this point. Now, like I said, this has had a much more positive impact on the markets. We've seen the equities trading higher, we've seen the euro and sterling trading higher, and this is something that just hasn't been achieved recently by the positive stories coming out of the eurozone. So again, it's good to see you've got some sustained optimism in the markets, which you can hopefully carry on over the next few days. We've also seen this reflected even in the bond markets. We've seen Spanish yields come down from around 7.2%, 7.3%. They're now trading at just over 7%. Italian yields have fallen below 6% after moving high above 6% on Monday. So again, there's a lot of optimism returning, and this could only improve over the next couple of days once we get a Greek coalition government in place, once we hear some more news after the G20 meetings today and yesterday about how the Eurozone leaders plan to stimulate growth in the economy, and whether they'd be willing to renegotiate the terms of the Greek bailout agreement, which, as we all know, they're very strict and very difficult terms for the Greeks. So again, there's a lot of optimism which you can hopefully bring into the markets at least over the next few days. Over the next couple of weeks, on the other hand, it could be a bit tougher. We have got the results to come from the external audit of the Spanish banks. We have got, while the Federal Reserve, while the extension of Operation Twist will extend the euro to hopefully around 128, 129. In the longer term, this may not be the case. I mean, at the moment we have seen a lot of the problems in the eurozone being resolved by just plugging the gaps. I mean, this 100 billion bailout of the Spanish banks, plugging more gaps, and it's not really resolved the problem, which is why we've seen the reaction to these solutions being very, very limited in time. They've not even lasted the morning in most cases. So I do believe we are going to see the euro fall off. Once it hits around 128, 129, we will see it fall off again, and that's just because until we stop plugging gaps, until we look at the real solution here, we're not going to really solve the problem. Therefore, people are not going to maintain faith in the eurozone as a whole. That's all we've got time for today. My name's Craig Earlham, market analyst at ALPARI UK. Thank you very much for joining us.